Howdy, who all my stock market gamblers? Welcome today. I'm Tall Mike. It's Wednesday, April 21st. What do we got going on? We got the stock market. The Dow is up 150. The Nasdaq's kind of flat. A lot of stocks have been beaten up. I'm starting to look at certain ones to see if I want to get back in them. Okay. I think we still have a little bit more on the downside in the NASDAQ. It's telling me it wants to still go lower from here. It's getting a bounce today. Well, actually, the NASDAQ's flat today. This Dow's getting a bounce today. But I do think that the NASDAQ still is going to come in a little bit. Now, what's doing well? Well, the miners, the gold and silver miners, they're playing catch-up. They've been behind the market. So as the market comes in, they're starting to play catch-up to the market. I like the gold and silver miners here. I still like them. I'm leaving those trades on. I'm looking to get back into some of the NASDAQ stocks that are beaten down really hard, but not just yet. I think there's still a little more to the downside. Now, why are gold and silver mining stocks doing well? Well, gold and silver's up today, but you know what's weird? The dollar's also up. Now, usually when the dollar gets stronger, gold and silver goes down. But gold and silver is having a very strong day, even with the dollar rebounding a little bit today. Okay, so we like gold and silver here. Now, but let's think about why they're going up. They're going up because of debt. We are a debt-driven. United States is just debt-driven. We don't produce stuff anymore. We produce dollar bills. We print them. We have debt. Okay, let's take a look at the debt now. The debt, we got $28 trillion is what they're saying we have. You go to the debt clock, and they'll say that we're $28 trillion in debt. But our GDP is right around $20 trillion. So it's kind of like 140% debt to GDP. Okay, is that good? Is that bad? Well, let's look back in time. Okay, let's go back to the year 2000 of the dot-com boom. What was our debt to GDP then? It was about 55%. So 55% then, 140% now. Okay, let's go back to 1980. What was the debt to GDP like then? It was 35%. So 1980, 35%. 2000, 55%, but we've jumped all the way up to 140%. Now, they say it's different this time. They say that we can have this type of debt because interest rates are so low, so we can afford to pay the interest on this debt. Now, I think interest rates are even going to go negative. Does that mean we can double the debt from here? Maybe, but I don't think it's going to end well. I really don't. Now, this is just the debt of the federal government is $28 trillion, but there's also state debt. States are in debt. I live in California. We're in debt. We're in debt really bad. Cities around here are in debt. They have to lay off police officers because they can't afford to pay them. They can't afford to pay the pensions. The pensions are going to be in trouble with all this debt. But what about like corporate debt? Do they have a lot of debt? Record high. What about, let's just take a look at housing debt. Housing debt, record high. What about stock market debt? This is called margin. Margin debt is at a record high. What about personal debt? What about like the personal household? What about student loans? About 1.5 trillion. Auto loans about the same, 1.5 trillion. And credit card debt, about the same, 1.5 trillion. So that's $4.5 trillion. Now, one plan is that we call it a debt forgiveness, a debt jubilee, if you will, where the government just prints $4.5 trillion, wipes out all the student loan, wipes out all the car loans, wipes out all the credit card loans, so we can go do it again. It's like I don't know. It's like giving a drug addict, he ran through his $100,000 on cocaine. Well, you're out of money. You can't do cocaine anymore. Let me give you some more money so you can go do the cocaine again. Look, debt is a drug. People are in debt. And this doesn't even count the liabilities of the government. Okay, let's take a look. Our government has a lot of liabilities on top of the $28 trillion. They got about a $20 trillion Social Security liability, about $32 trillion Medicare liability, and the administration we're in right now is going to increase these liabilities. They're very much in favor of spending. Look, they love helicopter money. They just want to drop the money out of the helicopter. Now, there is no plan ever to pay off the helicopter money. So what do they think they're going to do? Do they think it's just magically going to disappear? Maybe it will, but I don't think so. I don't think it ends well. Now, I know nobody cares about the debt right now. Nobody even talks about the debt anymore. Look, there's no plan to pay off the debt. Okay? Their plan is we're going to inflate our way out of it by printing more money, going farther into debt to get out of the debt. Does it make sense to you? Does it make sense? It doesn't make any sense to me. Look at the stimulus that they're doing, this helicopter money that they're doing, it's not stimulating our economy. You know whose economy it is stimulating? It's stimulating China's economy. That's correct, China's economy. Now, it does stimulate our stock market. The people that don't need the stimulus, that don't spend the stimulus, they put it into the stock market. The people that spend the stimulus on goods that come from China. We stimulate China's economy and we stimulate the stock market with this helicopter money that's never going to be paid back. All right. So what's this doing? Well, it's increasing poverty levels in the United States. It's increasing homelessness in the United States. It's creating a lot of problems that they do not foresee, that they do not take into account. Well, how can we protect ourselves? How can we protect ourselves? You know, what I do to protect myself financially, I buy gold. I buy silver. I stack these. These are silver eagles. These are real money from the United States government. It says $1 on it. $1. You know, in the old days, that would be worth $1. A silver dollar was a silver dollar. But today, a silver dollar is about $40. That's what a silver dollar is worth today, about $40. Gold, the same way. They print these. These are called gold eagles. Okay, so what's a gold eagle worth? Well, it says right on here, United States of America, and it says $50 for 1 ounce. Days, that's about what it was. What does 1 ounce go for today? About $2,000. About $2,000. Are these going to go up or are these going to go down? This real money. If we keep printing the helicopter money, what's going to happen to the real money? Is it going to go up or down? Okay, now I believe that if you keep printing the helicopter money, the real money has to go up. Now I know you boomers will tell me, no, it doesn't. Bitcoin's a new gold. Bitcoin's going to take over everything. We don't need to worry about the helicopter money, Mike. It's different this time. We got Bitcoin. You've seen the commercial. Bitcoin, the best money we've ever had. No. Right here. This is the best money we've ever had. Gold and silver. Best money we've ever had. This is real money printed by the United States still. They know it's all. They say $50 on it. They're trying to fool you. They say $1 on it. They're trying to fool you. Try to find this below $40. If you do, it's a good buy. Okay, that's real money. The government's money is this fiat money, this fake money, this helicopter money. We're going to be dropping a lot more of the helicopter money. Biden, he loves helicopter money. He wants it to flow. This will not end well. Will it make the stock market go up? I believe it will. That's why long term, we're still in that uptrend in the stock market. Long term, the Fed is going to print and print. They printed themselves into a corner. Look at, they want to lower interest rates negative. They cannot yet. Not yet. You know what they have to do? They have to take away cash. They have to cash out of the economy and just a credit card. Look at, when I go to restaurants now, I have to bring a credit card. You know why? They don't take cash around here. They do not take cash. You know what else they don't have around here? They don't have a menu. You have to get your cell phone. You have to get your cell phone out and you have to scan the QR code just to see the menu. I don't like this stuff. I'm an old-fashioned guy. I like using cash. They want to take the cash out of the economy so they can drop interest rates negative, and then you can't take your money out of the bank because there's no such thing as cash. It's all digital. It's all going to be done on your phone. Now, people think this will never happen. I'm telling you, it's happening faster than you think. I live in Silicon Valley. A lot of places don't take cash anymore. You have to carry a credit card. It's really funny. I mean, funny, bad funny. Like, I don't like it. Cash is going away quicker than you think. Negative interest rates will show up. But until then, they're just going to print this helicopter money, throw it out of the helicopter and see where it lands. Look, stock market's going to go higher, okay? Gold and silver. Gold and silver, it's going higher. It's going higher. Look, they can't print money without it going higher. I'm telling you, protect yourself, protect yourself, protect yourself. Look, that's all I want to talk about today. A little rant. I'm Tall Mike. If you like this stuff, give me the thumbs up. If you really like it, hit that subscribe button. We'll talk again soon, hopefully later in the week. Love this stuff. Get out there. Have a great Wednesday, everybody. Do some trading. Talk to you all again real soon. Bye-bye now.